Good morning, everyone. I hope you guys are good. So today we're going to look at this very important part of we're going to look at market analysis. So that's the part we're going to look at today. And basically, we have 3 types of market analysis, and we have the fundamental analysis, we have the technical analysis, and then the sentimental analysis or the sentiment analysis. Now, all the 3 have their own various areas of concentration, but what I may basically look at, or what we're going to dive in so much today, will be the technical analysis. But nevertheless, I would want to just tackle on fundamental and sentiment analysis just briefly, then we dive into the technical analysis. Now, what is fundamental analysis? Now, when you talk about fundamental analysis, basically, you are talking about, you are trying to look at an analysis that involves taking into considerations a lot of information with regards to a particular crypto project, right? When you're doing a fundamental analysis, you're not only looking at the coin in a bigger, in a smaller perspective. You look into all the available information. Actually, you go into research, a lot of research, to find out details about that particular coin, what the project is, what it intends to address. You look at the total supply, the fully diluted, the maximum supply. You look at the community in that particular cryptocurrency. You look at a lot of information. You look at some of the social media platforms, and then a lot of information. So when you're doing fundamental analysis, you'll be taking into consideration all those information, okay? So that, why would you be doing that? Because you'll be looking at, you'll be aiming at looking at the intrinsic value, okay, of that particular coin. That is what you'll be interested in. You'll be interested in looking at the intrinsic value, but then with the goal of determining whether that asset has been overvalued or undervalued. Now, what is the essence of that? You want to invest in a coin whose value is projected to be something bigger in the near future, because you would want to ride along with the team that would be investing in that particular coin. So this is basically important for people who are willing to invest long term, right? So fundamental analysis would be good for someone who may be looking at investing long term. Like at the moment, after the Bitcoin halving, most traders are trying to look at, especially the long term investors, are trying to look out for those coins that they think may do maybe a 10x, a 20x, and even a 50x. Now, why are they doing that? They're not just going to look at it in a smaller perspective. They will have to do a lot of research. They will have to look at a lot of information, right? So that they really know, okay, that once they invest their money on that coin, indeed what they look up to achieving would be actually success, all right? You wouldn't wish to invest in a coin that probably may not give you the intended valuation that you had wanted. Okay, so when you're looking at fundamental analysis, you basically look at information, okay? Nothing to do with the chart. Yes, in one way or another, you may briefly look at it, but you don't look at it in details. You're basically looking at just information surrounding that project, okay? Technical, fundamental analysis is all about. So I may request as well that if you joined and then your background is noisy, you could mute yourself so that you don't affect the class, okay? Yeah, so basically that is that. Then when you talk about sentimental analysis, basically this involves evaluating public perception of cryptocurrencies. Especially, you'll be taking into consideration traders' emotional opinions and attitude towards a specific crypto. And how do you get to do that? Through either following their social media platforms, through being updated with news regarding what is happening around the world in the fields of cryptocurrency. All right. So with sentiment, basically, you are not doing any research. You're not going to look into any market or the chart, but you'll be so much interested in information, on latest information developing around the crypto space. Just you'll be interested in knowing about the information surrounding the given crypto project. And basically, you're not interested in doing any research. You just want to follow the social media. Like, for example, I give a simple example of a Dogecoin. Most people who depend on sentimental attachment to invest, sentimental analysis to invest in Dogecoin, basically tend to follow so much tweets that are done by Elon Musk, because he's one of those renowned investors in Dogecoin. So anything that Elon Musk may say tends to influence the value or the price of Dogecoin in one way or another. So most people who are so much dependent on sentimental analysis, especially those who like investing in Dogecoin, don't expect them to so much go into the market if they don't have the skill to analyze the market. Don't expect them to go so much and do fundamental analysis if they are not, they don't love reading. They would be so much following the tweets made by Elon Musk with regards to the Dogecoin itself, so that when anything goes, when some great news comes in, or Elon Musk posts something good with regards to Dogecoin, boom, they jump in, because they know what is most likely going to happen if it is a positive news. So that is what sentimental analysis is all about. You basically follow news surrounding the crypto space, what is happening, the trending information in the areas of crypto. Like, for example, another simple example is, you see most of the time, SEC, when SEC comes out with some decision with regards to cryptocurrency, there's a way it shakes the market. There's a way it shakes the price of cryptocurrencies, right? Like a lot of recent, there was a lot of speculation. There were a lot of speculation regarding BTC ETFs. When that speculation, when it was approved, Bitcoin surged, the price surged, it moved higher, all right? But then after the event, after the ETF approval, what happened then? The price had to drop again. Same applies to Ethereum ETF. When there were a lot of speculation on when the Ethereum ETF is going to be approved, the price was surging like nothing. But immediately after that, now you see it is slightly going bearish. So that is what we call sentimental analysis. You are depending on what is happening around the crypto space, the news, right? Okay. So why most people tend to so much rely on this is that because when you're a sentimental analyst, what this information will help you as a trader, it will help you gauge the market sentiment, so that you understand better how other investors are feeling in regard to that crypto, so that you can as well make a decision on whether to invest or not. All right. So that is about sentimental analysis. Will excuse me, I think I may mute some people.
Coach. Maybe you mute all of these people because
yeah, you're right. Learn something today. Okay. Yeah. So that is sentimental analysis. So these are the three types of analysis. We talked about the fundamental analysis, which basically involve you doing a lot more of research with regards to a particular crypto project you would wish to invest in or put your money in. Then we talk about sentimental. You basically look at the news. You follow news surrounding the latest information surrounding the crypto space in general, or in relation to a particular coin you would wish to invest in, basically. Then the technical analysis, which is our center of focus today, is where now you tend to concentrate, you narrow down more into using the data, the market data or information, right, regarding a particular coin to help you predict what the future price movement will be like. Okay. So with this one, it involves basically evaluating and analyzing statistics generated by the market, right? You analyze statistic generated by the market based on the series of events that was happening, based on the previous price movement. You are able to tell what the future price movement will be like, right? But of course, at all this, you will be depending on the supply and demand function. That is what you will be basing on. So you'll be looking at the price, you'll be looking at the volume, all right, with regards to supply and demand, so that you're able to tell what the future price and volume of that particular currency will be like. Okay? So that is what technical analysis is all about. Basically, it is price action. Go into the chart, you don't so much use long time information. At least it is always advisable you use information that is not so much long time, but at least somehow closer to the area or closer to the future, because it is what is happening in previously, but closer to the future that can predict what is happening in the future or what is going to happen next. Okay. Now, why would it be very important for you to actually learn and understand what technical analysis is and how to analyze these coins? One, it enables you to have a fair estimate or predict the future price movement, as I already said. It helps you a great deal, because if you're able to use the information you have you got actually from how the price has been faring, and then you draw, you use your drawing tools, and then you put it on the chart, including the indicators. At least this information will be sufficient enough to help you predict what the future movement will be like, right? Because what you're doing is you're predicting the future. So most of the information, the analysis tools will be drawn to the future, so that you're able to tell or see or assess how the future performance of the price is going to be. All right. So it is very important for you to analyze, to understand this, because it will give you a proper decision-making avenue. All right. Without that, you may jump into the market anyhowly, and then you see, in most cases, that's how the market goes against us. And sometimes when it goes against us, we don't know what to do, simply because we have no skill, we have no knowledge with regards to how the market fares. So if the market goes against you, you begin complaining. When the market goes against you, you think you want to sell at a loss. Yet, by understanding this, you'll be taking advantage, right? As we are going to see throughout our technical analysis class. So it is very important for you to know this, because the more you understand it, the more you will improve on your winning rates in your trading. Okay? So now there are what we call the technical analysis support tools. The things that aid in technical analysis, or the things that we may use or we may require when we want to analyze the market. There are basically four. We use what we call the trend line. We use trend lines, which most of you know as support and resistance. We use technical indicators. All right? We use technical indicators. We use candlestick patterns, and then we use chart patterns. Now, there are different schools of traders who may prefer any of the four supporting tools. There are people who are entirely dependent on the trend lines. For them, they are pure price action analysts. They analyze the market based on pure price action. All right? They use less of the indicator. They use less of the candlestick pattern. Nor do they even use the chart patterns. For them, they concentrate so much on the trend lines, because trend lines is the basis, is the foundation, is the backbone of any price action. All right? Or technical analysis. Once you understand trend line, the rest is history. The rest just helps in supplementing or complementing your analysis. They just help in supporting you. They improve on your decision making. All right? They give you more confidence as to what you're supposed to do in the market, as long as you understand trend lines. Okay? Yeah. So I hope you're good. I hope you're still good. Before we can continue, let me hope we are all together. If you're all together, or if you're following, let me just see. Let me see a one on the chat. If you're still following, because we have a long way to go. If you're still following, please let me see a one on the chat, just to ensure that we are on the same page. Before let's continue. So we're going to begin our class with the trend lines. So what are these trend lines? In most cases, we tend to know them as support and resistance. So trend lines are actually straight line drawn over pivot highs or under pivot lows, and then extended to the future. Very important. Extended to the future to show price action and prevailing direction of the price. The most important thing is extended to the future. All right. So that is the most important thing when you're dealing with trend lines. You must draw your trend lines and then extend to the future, because what you're predicting is the future price movement, not the recent, not the previous. All right. So in simple terms, if you're to summarize or understand in a layman's way what a trend line is, it is actually a visual representation of a support and a resistance on the chart. Okay. What you draw as support and resistance is what we call actually the trend lines. Okay. And they're of different types, depending on the direction or how you're going to draw them. Okay. They're of different types, as we're going to see on the chart. And the first we're going to look at is what we call the sideways trend line. Sideways trend line basically is a trend line you draw horizontally, the one we commonly know. All right. The sideways trend line is the one we commonly know, which we draw horizontally, as we establish our support and resistance. You get that? So when we're doing that, basically when you're drawing this trend line, you connect. If you're going to draw a resistance line, you connect the higher highs, or what we refer to as the swing high. Then when you want to draw a support, you connect any two or more lower lows, or what we call the swing low. And we're going to see this practically. I just want to give you the background, the theoretical background, then we go into it practically. All right? So it is very important. Now, why should you be drawing this? It is very important for someone to understand how to draw these trend lines. Why? Because, okay, before we can go to that, this is how it will be represented. This is how it will appear on the chart if you draw them. So this is what we call the higher high or the swing high. So you connect any two or three higher highs to form what we call a resistance line. Or, then you connect any lower low, any two or more lower lows, or what we call swing lows, to form what we call the support line. Now, when you talk about support and resistance, we're not basically looking at a line. We're looking at an area as well. Okay? We're looking at a level, an area, or a line within the chart at which, once the price reaches, the price reacts by either breaking above it or below it or doing a reversal. All right? There are specific price levels at which, once price approaches, the price reacts. And the reaction is either in two ways. If the price was on an uptrend, on approaching a resistance line, it is going to react in two ways. Either the resistance line will reject the price from continuing up, and then it will cause what we call a reversal to the downside. Or, depending on the momentum of how the price was rising, once the price approaches a resistance level, it will react to it by breaking above. And that is a scenario where we will say that a price has broken out. All right, it has broken out. So at that point where the price has broken, we call it a break of structure. All right, so the price would have broken above that resistance level. All right, same applies to when the price is on a downtrend. Once it approaches a support line, it will react to it in two ways. Like, for example, we're seeing here that as the price was coming down, this support level was able to prevent the price from continuing to go down. And what happened then? It supported the price and caused a price reversal to the upside. Now, in some other instances, once the price comes down towards, or it approaches a support level, depending on the momentum at which the price is dropping, sometimes it breaks below the support level. And once it breaks below the support level, that would be called a breakout as well, but a breakout to the downside. So in that case, we would have said the support level has failed to meet its what it was intended to do. It was not able to support the price because probably maybe the momentum was so high. right? Same applies to the resistance. So when you draw a sideways trend line, you draw it horizontally by connecting swing highs to swing highs, swing lows to swing lows, with whatever you've connected on the swing high forming the resistance, and whatever you've connected on the swing lows forming your support. All right. So that is what this sideways trend line is all about. Now, why is it very important for you to know how to draw this trend line? Why is it very important for you to know or understand how to draw this trend line? Now, one, it is important for you to draw this trend line because, number one, you want to identify entry opportunities. You want to look out for entry opportunities in the market where you can possibly enter the market, or when you should enter the market. That's the first thing you need to know, right? You want to look out for an entry opportunity in the market. Two, you want as well to also look out for an exit point. After entering the market, there must be an exit point. So drawing these trend lines on the chart or the support and resistance helps you to determine the possible take profit points. Of course, the possible take profit points are the exit points, which in most cases, when you're making entry, make sure you enter at a support level or an area closer to the support level on a trend that is on a rise. Any area, either on the support or somewhere nearer the support area. But for as long as the price is on a rise, that is the best entry point. Then two, exit at the resistance level or somewhere closer to the resistance level. You get that? Why? Because in most cases, when the price is on a rise, you will never assume that the price will go past the resistance level, not until it does so. So as a trader who is smart, what you do is from whatever point you enter the market, let's say you enter around the support area here, as the price is on the rise, you're going to take profit from your point of entry all the way to that resistance. If it breaks above, that's well and good. You can stay on that trade. But if it doesn't, take off whatever you can take as take profit and plan for the next entry if the breakout is successful. All right? But you cannot assume that the breakout is going to be successful until that happens. You get that? So the best entry point is at the support line or support level or area closer to the support level on a trend that is on a rise, not on a trend that is on a down, that is going downwards. No, it should be a trend that is on a rise. And how do you tell that a trend is on a rise? One, as if if the price is supported like we are doing here. The price was on a downtrend and then it is supported, right? Then you have the confirmation candles there. And we're going to look at that in details. But brief in the picture is you enter at a support level. Okay, we shall look at the details bit of it. How we can tell that the price has been supported successfully, how we can tell that the price has reversed successfully, right? Or the price is now ready to go on an uptrend. We can tell there. You can either use the candle, the candles that are formed around there, you know, alongside the confirmation candle, right? Or you can use a pattern. So that we shall understand along the way as we go through this. Okay. So basically, that's what a horizontal trend line is. Now I'm going to take you to the chart. I'm going to take you to the chart and then try to bring this into perspective, bring this into reality or practicality, so that we understand it better. All right. Okay. So are we still good? So basically, today we're going to look at the horizontal trend line. Then in the next, we shall look at the uptrend, how we draw a trend line on an uptrend, and then how we enter, how we exit, you know, a lot of things on an uptrend. Then the same applies to a downtrend. We shall look at how we draw this trend line on a downtrend and how important it is when we enter or where we're supposed to enter, and at the same time, where we are supposed to exit. All right. So that's what we're going to look at in the next. So if you're still good, all right, that's nice. So if you're still good, let's go on the chart. Let's go on the chart and I'm going to pick any coin. Let me pick any coin. I'm gonna pick any coin. Let me pick. Okay, let me pick which one? Let me pick Pepe. Nicholas Pepe. Okay, so let me first remove these other things from here. Remove everything so that the chart is clear. We are not talking about indicators. We are talking about only trend lines. Okay. So, ladies and gentlemen, we are talking about a horizontal line, a horizontal trend line. And in talking about a horizontal trend line, we are talking about support and resistance. And just like we said, a support and resistance are actually price levels. Let's talk about resistance first. A resistance line is a price level which holds the price from continuing to rise. That price level which prevents the price from continuing to go in an uptrend. All right? That area at which once the price approaches it, there is a reaction. And a reaction is in either a reversal or a breakout to the upside. And normally this is accompanied, this is signaled by certain candles that are formed. So any line you're going to draw, for as long as the price is below it, becomes a resistance line. All right. Now, most of the times we tend to, I'm going to give a simple scenario of a trend that is on a rise. So when you have a price that is on a rise like this, it rises and then retraces, then rises again, and then retraces, and then rises again, and then retraces, and then rises again, and then retraces. So as long as the trend is on a rise, okay, okay, so that's the first scenario. And then we have the second scenario here. Price may be like that. May try to rise like that, and it breaks below. And maybe we have something like that. You know, something like that. We'll just stop at that point. So, if you have a scenario like this, this is a price movement on the chart. And in this price movement, we're able to notice that at the moment, this is where our price is, right? The arrow is representing where the price is, the current price is. And every peak that is formed, okay, stands for something on the chart. Now, with reference to what the current price is, any line we're going to draw above becomes a resistance. And any line we're going to draw from below the price becomes a support line. Okay? Now, when we talk about a support line, or when we talk about support and resistance, what we must also put at the back of your mind is we are not talking about a line, just like I said. We're looking at an area. Now, if you're looking at an area, there are instances where you're not going to pay so much attention to what points the line is going to touch. You're only going to look at for those points where either above or below, there is a tendency that the candle came close to touching or exactly touched the point. Now, this is what I'm trying to mean. That when you have, for example, use this 1 hour time frame, okay? Now, for example, if you see here on our chart, this is our current price, right? This is our current price. Now, if you want to establish your first resistance line, you're going to look at any peak point, any inverted V point, which has an edge like that, or a peak, okay? A peak that is like that. you're going to look out for that point, which is above the current price. And that will be your first resistance. Now, when you're doing that, look at the most recent swing high. The most recent point where the price was on a rise and then it had a reversal. That's what you'll be looking out for with reference to the current price. Okay? With reference to the current price. That's what you will be doing. You draw your resistance line there. Then if you want to draw your second resistance line, you're going to make reference to the first resistance line you've drawn. So you look at it slightly up and then back in history and look out for another recent swing high in relation to the resistance one. And that will become your resistance too. Then when it comes to support, you make reference to the current price. Any swing low, the most recent swing low is where you're going to establish your first support. All right? That point which has a V shape, that sharp part, that corner, that sharp part becomes your swing high. Swing low. And that will be where you're going to establish, your first support line. Okay? So you look out for the most recent swing low. And then the process continues. If you want to draw your second support, make reference to the first swing, to the first support line in that order. So let's try to put this into practice. We're going to use the 1 hour time frame. So we're going to pick our trend line, the drawing tools. I don't know, I believe I'm taking it that all of us are conversant with the trading view. That's why some things I'm not showing you how to go about them. But for those who may not have any prior knowledge to that, you always come to the pencil to get those drawing tools. So when you tap on the pencil, you scroll through, you'll have those tools categorized. The first category is the trend line. So anything to do with the drawing lines, drawing trend lines, anything regarding drawing trend lines, anything that may arise into a trend line being formed or drawn on the chart, you find them on the trend lines here. So you can have the trend line, the ray, the arrow, anything that involves a line. Then if you want the other drawing tools under the Gann and Fibonacci, these are some of the things that may help you, especially if you love using the indicators. So you find most of the times the manual indicators, you can always find them here, right? And then you have also the geometric shapes, right? For those who love using patterns, those who like using patterns or who love trading using patterns, yes, you can find them under the geometric shapes. Okay. Yes, so geometric shapes, that's where the patterns you'll find. Then for those who love using the manual indicators, you can find them under the Gann and Fibonacci. Then anything to do with drawing, you find them under the trend lines. I hope that is okay. So any of them that you may want to use, like for example, you want to use a horizontal line, which is here. Simply what you do, you tap on, you long press on it, and then you'll see a pop-up of some information asking you to do the needful. So you follow that and do what you're supposed to do. Like here, because it was already on my favorite, it is asking me to remove, or whether I want to remove it or not. So I'm not interested in removing because it is already on my favorite list. But if you wanted to remove, that's what you would do. You just tap on it and just remove. If you want to add it back, like we're seeing here, just tap on it, long press, and then it will ask you to add to favorite and tap on it again, and it will be there on your favorite. So let's use the horizontal line. So once you pick the horizontal line, I'll draw my first resistance. But before I draw my first resistance, the first thing I am supposed to do is identify where I locate where my price is. So this is my current market price. 2, I'm going to scroll up and then backwards. And then backwards. So what I'm going to find here as the most recent swing high with relation to this becomes my first resistance point. So I'm going to scroll backwards. Okay, let me just scroll and I see if I will find any point. Okay, let me go to 4 hours time frame. Okay. So that's where my, let me use a coin that has a long history, or that came sometimes back. Pepe came, I think, was launched. If not, it was started trading it, I think, last year, late last year or this year, early this year. I don't quite remember, but I want to use an old coin, a coin that has been there since 2021 or even before 2021. Like let me use like Gala. Gala is one of those coins that has taken some time, so it has good record. Okay, yeah, that this one can be okay. All right, so let's use Gala. Let's use Gala. Okay, so if you are to use Gala, let me use 1 hour time frame. That's my favorite. So we're going to make reference to the current price, right? We want to draw our first resistance. So this is where our price is. Sorry. All right. Just a minute. Let me first remove my annotation. All right. So here it is. So this is our current price. That's the first thing we do. We locate our current price. Then the second thing, we're going to look up slightly and then look back in history. Look at the first swing high, the most recent, right? And our most recent here, I think, would be this, right? That would be our most recent. So that's where we're going to do our first resistance line. So we're going to pick our horizontal line, then we put it there, okay? Right? So that's our first resistance line. Now, if you want to draw our second resistance line, we're going to make reference to the first. So this is our R1. Let me just put it as R1. So this is R1. R1. So we're going to make reference to R1 to draw our R2. So same thing, we're going to look up and look out for any swing high in relation to our resistance one. So let's go backward. So there we are. So this can as well be. So we have a number of them here, a number of them. We have this, if you can see, we have this, and then we also have that. See that? All right, we have that, this, and we also have that. Why? Because if you look at this movement, the price came from here, right? It dipped to this price level, then had to retrace, and then broke below it, had to retrace again, and then broke below it, like we are seeing. So it becomes a key point also. We cannot take it for granted. So we can consider this. Then if we want to draw the third one, we consider that, right? So let's draw our second resistance. So we're making reference to the first resistance. So that means this would be our second resistance. See that? Then resistance 3 will be the third one. Will be this other part here, would be here, right? So let's pick this, pick horizontal line, and we're going to put there. So, and we're drawing this, when you're drawing a resistance line, what we must ensure so much is we should ensure that the line touches on the high of that particular candle with the longest upper wick. Okay, let it touch the high. You can have a number of candles almost having similar height, but make sure it touches the tip or the high of the longest candle there, right? Of the longest candle. All right, so that is that. Now, that is a resistance line. Now, if you want to draw a support line, because you don't have to overdraw them, just draw 1 or 2 or 3, that's enough. Then when it comes to drawing the support, we make reference to the current price, then look down and look at the most recent swing low. The most recent swing low, according to us, may be this, I think, maybe this. See this candle here, the hammer candle? That would form, its low would be where we're going to draw our resistance line. So pick a horizontal line, put it there at the low of that candle. So it is our first support. So it will be S1. This will be our S1. So we want to draw S2. S2, we shall make reference to S1. So we're gonna look down and then go back in history and check out for the most recent swing low. And the most recent swing low we come across would be this area or this point. Because we have multiple touches there. So we're going to put it on this other one. You can put it here on this or that. Now, because when you talk about this support level, we are not only concentrating on a line. So for now, because we're concentrating on line, we can put it on the wick. But if you were to use an area, then the whole of this part would be captured. You see, the whole of this point would be captured. And how we draw a support area and resistance area, I will show you. But let's first concentrate on the line. So we're interested in creating a line. So we put it there. So that's our resistance, support 2. Support 3, we make reference to support 2. Look down and then look up backwards in history. And I think this will be the immediate one we are going to come across. This will be the most. So we shall pick a horizontal line, put it there. And we're good. Now you have 3 support levels and then 3 resistance levels. Now, these support levels are the areas in which you think that should price fare out as predicted, these are the possible points of price reversal if the price is coming downward. So as a trader, this is what you should expect. That with my support level 1, I expect if the price is continuing to drop like it is doing, if it approaches my support level, there is a likelihood, there is a chance that it may reverse and then go back up. That's the first scenario. That's the first thing you have in the back of your mind, right? Now, the second scenario that you may have at the back of your mind as you trade this, you say now, should this price fail to be supported at S1, you expect it to come all the way to S2, and then it will reverse. Or if it comes past S2 and it continues to go down, it may drop all the way to S3, and then it retraces or it reverses. So what is happening here is a retracement or a reversal. You are not sure which one is which because you cannot control the market, but you need to let the market take its course. But based on your analysis, you should be in position to make certain decisions. You should be in position to predict certain sets of movement. You're not going to control it. It will fare out the way it is going to fare, but you can have an estimation of something that is most likely going to happen. You get that? So those are the scenarios you expect to happen. However, for a normal market that is on a downtrend, this is what you're going to expect. Let me show you that you're going to expect this kind of movement. That now that the price is coming down, you have some level of certainty that once it is supported here, it may either retrace to some level and then it comes down and breaks support 1. Then it is supported at 2. Then it retraces back or retests support 1 and then it breaks support 2 to support 3. If this is a downtrend, this is what you would expect. This is the movement you're going to expect. There would be a retracement and a break of structure, retracement and a break of structures progressively, right, to form a downtrend. But if this was a consolidating market, what you expect is that the price will always trade within. It may trade within, right, within these 2, resistance 1 and support 1. It may just be moving within the 2 lines or within the 2 trend lines, okay, if it is a consolidating market. Now, if it is an uptrend, or if it is a reversal, you expect that If the price comes to this level and it gets supported at 1, you expect it to rise back up and break resistance 1. Then it comes and retests resistance 1 and then breaks resistance 2 to resistance 3. Then it gets it retraces to resistance 2 and breaks resistance 3 all the way in that manner. And it will be having, this would be, in this case, we shall call this a trend reversal. We shall say the trend has reversed. Now it is on an uptrend. Okay, that is in case that happens. All right, now we shall come to that when you're looking at an uptrend, when you're looking at a downtrend. We shall explain those scenarios, what brings about a reversal to the upside and what brings about a reversal to the downside. But the most important thing here, first get to understand how you draw this support and resistance. That's the most important thing. Okay, so after drawing this, as a trader, now what do? You now want to identify entry opportunities. Now, when you want to identify entry opportunities, after drawing your trend line on a bigger time frame, like 1 hour, go and look out for entry opportunities in a lower time frame. Mostly, me, I love 15 minutes. Once in a while, 30 minutes. Now, why? Because as a trader, if you remain on that same time frame, as a trader who is intending to enter the market, what you're going to do is you can say, okay, where you're going to set your trap. You're going to set your trap at support 1, meaning you're going to preset. And your preset price would be 0.04. No, not 0.04. If you're going to preset here, it will be 0.0. It will be 0.04318. That is the one highlighted in black. So meaning you expect the price to come to this point, all right? Once it comes to that point, it will reverse. It will either reverse or retrace. For you, you don't want to know which one will happen, because irrespective of which one happens, you can still make some money. You can enter at a support line, right? So that is what you're going to do. Okay. Yeah. So just a minute. This mail is starting. I hope my okay, it's on. Okay. So as a trader, you would enter from here, from any point of support of preset, and then take profit to this resistance. At least that is what you know. That if the price reverses a support 1, the next destination will be back to resistance 1. But you're not very sure, right? 5% may be big. It may hit the 5% or it may not. But as a trader, you would rather take up small profits along the price rise. Now here, what happens normally is this, that because you're in 1 hour time frame, there are a lot of events that may be happening within a lower time frame that may be hidden out in the higher time frame. Actually, when you go to a lower time frame, this movement, when you're in the higher time frame, you may expect that one candle will build up all the way up to there, which is not the case. But to have a better picture of what is most likely going to happen, because the price does not rise linearly, you are going to expect some movement like this. See, it will hit 5%, but with this kind of movement, it will rise, it will get some mini resistance somewhere, it will retrace, then it breaks the mini resistance, gets another retrace, like that, in that manner. Now, what you're not so much sure about, or what you don't know, is where am I going to see this? How am I going to find these mini resistances? So that instead of putting 5% at a go, I am able to benefit from some of these percentages, this rise. This would be a take profit This would be another take profit. Then that would be another take profit. I can take those profit in bits, but steadily. See that? Take the first, take the second, take the third, because when the price rises and it encounters a resistance, it is definitely going to be rejected. So if it is rejected, it will reverse. If it is to continue up, it will reverse. And then this next time it is going to break that particular mini resistance. Then it establishes the next, it comes across the next resistance. Once it approaches the next resistance, the resistance line will reject it. If it is to continue still up, it will retrace a little to gather momentum back to resistance 1 or mini resistance 1, and then the next time it will go and break mini resistance 2. And finally, it will hit your take profit of 5%, but it will not be a linear movement. It will be this kind of movement. A surge, a retracement, and break of structure. A surge, a retracement, and break of structure. Okay? That's what you should expect. So this would be visible when you go to a lower time frame. You're going to be in position to identify some of those mini support, mini resistance that are between this, that is between these two lines, the resistance 1 and support 1. You may be in position, you will be in position to identify some of those mini resistance. So that as you take profit, you now know how to take those profits. So let's go to a lower time frame like 15, because we want to look at for an entry opportunity. So we are in the 15 minutes time frame. Here we are. Now, ladies and gentlemen, if you come here, see, if you make reference to where the price is, right? Where the price is, you will discover that even before you reach the main resistance, in the middle here, there is a silent resistance that is going to be encountered. Why? Because you see here how the price reacted to this. It is invisible, right? It is invisible, but you can make it visible. You see that? Now here you are able to tell that, that much as my interest was 5%, but I'm most likely to encounter some resistance here. You see that? Do you see that? We call it a mini resistance because of the manner in which price reacted once it approached that level. You see here, multiple times it rejected the price. The price would come, it gets rejected, comes back. Goes again, gets rejected, comes back. Goes again, not until this time it retraced and gathered more momentum and broke above. You see? So it becomes a key resistance. We cannot take it for granted. So meaning if you are thinking of taking 5%, we can first say, okay, it is from any point we are going to enter. If we decide to enter at current price here, right, we're going to take our profit to this point first. If you decide to enter at current price, yes, if you're to enter at current price here, you will take profit to this line. That's about 1.3, 1.2 something to 1.3, right? If you're going to use preset, if you preset, that means as the price drops to this support 1, you're going to take your first profit to be 2, okay, to be around 2. See that? That is the first point you encounter. You're most likely going to encounter a resistance. That's 1. Then the second scenario here, after, if the price successfully breaks above this mini resistance 1, do we have any other resistance point we are going to encounter above this mini resistance 1? Do you have any in between here? It is what you are supposed to assess. Now you go back. Let me first draw this with let me make it like this. Let me use another color. Let me use a green. So that's 1. Then we're going to come to the second one. Do we have any in between? Because we're making reference to this first mini resistance. In between, we have, if you can see here, we have something as well. So that means, yes, there's another mini resistance, which we can try to establish. You have that around that point. See that? Yeah? You can deal with those two. You can deal with those two. You may not deal with all, but you can deal with those major ones, depending on how reactive they were. Because while we're dealing with the resistance 2 also, You see here, it reacted, here it reacted, here, it reacted here, it reacted here. So we cannot also take it for granted. That means it is a key what? Resistance area as well. So we have now that man. So we expect now that the price may move in this manner if all goes to plan. That if it was to rise, it will go here and either reverse back, or it will go and go past this point. Go past to resistance, mini resistance 1, and then it goes past mini resistance 2, and then it will hit your profit. Okay, that's the first scenario. Second scenario, we expect it to be like this. The price is still going to come down to this point, right? Then from here, we expect it to rise to mini resistance 1. Then it will retrace. It will retrace here, or you may retrace midway if you follow the rules of Fibonacci about those golden ratios. Then it will come here, then retraces there, and then we have that movement. Those two scenarios are what is most likely going to happen. Yeah, you can have that happen. You see that? But the most important thing, at least, is you are able to identify an earlier entry and earlier exit point, which are one. The first one is here. You are most likely going to encounter some resistance here. You're going to encounter another resistance before hitting your take profit. So it is very important for you to understand some of those things. So for those who like using preset here, and then take profit to this level. Okay. For those who love using current price, enter here, then measure from your entry point from here to the first support. That is the margin call drop for the first call. Margin call drop for the first call. Now, if you want to establish the margin call drop for the second call, measure that distance from here to the next. Now, if you also find that there can be some other mini resistance in between, you can as well use them for establishing more margin calls. You can divide it, but here you can measure this from here to here. That is about 2.07 margin call drop for the second call. If you want to use like that, if you want to use current price, okay? The first call normally has a smaller call drop. So you can use that and you're good. But as a trader, of course, when you're trading and you're entering, after doing your analysis very well, you want to enter and then the market should go in your favor. So in most cases, you establish this support line just to guide you in case the market begins going against you. That's when you know how much to measure from what point to what point to establish your margin call drop. All right. So that's why I always encourage that apart from our bull run strategy setting, if you're entering it by yourself, first of all, don't establish margin call drops anyhow. Don't just establish multiple number of call margin. No, establish one at a time in case the market goes against you. Like for example, if this price was to drop here, right? I have my first margin call drop, 0.89, right? I'll only establish that one. Now, in case the robot buys from this level and then the market continues to dip, if it dips below this line, I'm going to measure from whatever point the price is to this second support. Whatever percentage I get here, I'm going to set it as the margin call drop for the second call. Then if the price does not reverse from my support 2 and it continues to go down at whatever point it is going to be, or the market price would be, I'll measure from that point to support 3. Whatever percentage I get, that is the margin call drop for the third call. You don't just establish anyhow. No. That would be wrong. Okay? You should be ensuring wallet management. In so doing that, you'll actually be managing your wallet as well. The robot won't just be using your funds anyhow. It will be using it based on your instruction when it is supposed to do it, as you want it to be done. So you don't just establish, okay? All right, so basically that's how you establish this trade line resistance, how you make entry, how you establish margin call drops, and so forth. So that is basically what we're supposed to look out for today. And we're looking at today. Are we good? Any question? Any question? Any question before we end? Any questions so far? Any question?
Coach, good morning.
Good morning.
Nice one, Coach.
Thank you.
But I would suggest if we can be doing this often, it will be a good thing to us, because so many of us do not understand this trading view, how to use it. So if we can be doing it, if not every day, but let's be once or twice in a week, it will be very good.
Yeah, actually, I was so up and down, but I think I'm done now. That's why you see on that timetable we have for different days of doing different things. So we're going to try and make it consistent now. I'm at least there, because I also want it to be a point where I don't have to be doing it myself alone. You may have also to be, some other people have to do this as well.
Yes,
because I will not be doing everything all the time.
Or just few people to generate the signal.
So that's what I'm trying to work at. So within the entire month, this month of June, just expected an action-packed week, an action-packed month for this, so that I'm also relieved of certain things. You can now pick trade and trade by yourself, yeah? Because other than depending on the signal all the time.
Thank you very much.
So we have, for the technical analysis, we shall be having it twice a week, and I think on the timetable it is talking about Monday and Wednesday. So expect the next class on Wednesday for the technical analysis class. Then the other one will be for the other programs. Okay? Yeah. At least very sorry we have been silent. Good morning.
Thanks very much for the lesson. Personally, I've gained more on what I knew, but I was requesting, is it possible if we can access the notes which you are using, such that when someone is free in his own time, we reread and see what we can do? Because it's also a guiding tool. Most of the times, I've always been seeing what you've been giving us, we've been learning, but I didn't mind much on those other sentimental analysis and the fundamentals. I always thought it is something big and I couldn't condense it in my mind. So I would always run after the technical analysis. I try to follow. But for the journey I've walked in Royal Q and in trading, today has been the biggest day of my training, learning how to draw those trend lines. Of course, I would get a chart, I just draw, but all those tips which you've given us, have shown me that I really had something to do about my skill, and more reading is part of learning. So I'd request if we can get that presentation on the group. Thank you.
Yeah, I'll share. Thank you very much. I'll share with you. I think I'll share that there are very many. I have a number of them on different topics, probably. And I think if you are done with one, I will be sharing once we are through. So maybe when I'm done,
that
that's
is
when
quite
I'll
good, because
just
when you learn about something and you get notes about it, there's a way how the explanation goes deep to your mind and you get it. So before we learn something, it may confuse us getting notes of what we don't know from you.
it is fine.
Thank you.
Yeah, and maybe just for another thing for us who are on the call, at the moment, you see, there's still a lot going on in the crypto space, and I think we're just recovering from the market. Really recovering. The market is really not very certain or very clear. It's sort of, actually, it is not very clear. rises and dips, rises and dips. But I think a clear market may come in the course of June, July, going to August, and maybe heading to September. That's when we may have a clear direction of the market. The effect of, there were a lot of events that affected the market, like there are like just quite a number of things that affected the market. So, and I think very many of us, including myself in some coins, were floating. We're floating, but I think I'm going to, we shall find a way in one of the lessons and try to, there's a guidance I'm going to give for those who are also floating that much. If we are floating, we are going to share together some strategy to help us continue benefiting or making small profits, small ones from the coins that are trading, that are floating, as we wait for the final recovery. Yeah. So as we also say always that the market is not our friend. We can be good planners, we can analyze the market, but when some of those other factors surrounding crypto, the crypto market comes in, like the sentimental analysis, the news, once the news, breaks, SEC says something, you see the market get crushed, it gets affected, and we find ourselves in floating loss. It is not anybody's wish, I think, but what do? We need to move along. The beautiful thing, at least that we must gain confidence in, is that at least at the end of it all, we are not in, we have not lost anything. We will just be a little patient for the market to recover or come our way. Yeah, because there's just a lot, apart from the technical analysis, there's a lot of things that affects the market, especially the sentimental bit of it, the news. A lot of things are going on in the market at the moment. In the crypto space at the moment, a lot of things, a lot of regulations are happening, a lot of governments and SEC, the US SEC, is trying to do a lot with regards to crypto, and it is shaking us so much, the retail traders. So we have to bear, but I think along the way, we shall be good. We shall be good and we shall bounce back. Yeah. So I think let's stop there for today. Let's meet on Wednesday for the same class. But on Tuesday, I think we have another, tomorrow. Is it tomorrow, today evening? Today evening, we have something. You will check on that timetable, what we have in the evening, so that you be part. You can be part in the evening. So let's stop there and have a blessed morning to all.
Okay, thank you, sir.
You're welcome.